So, Mike, why don't we dive right in? I think it first might be necessary to take a step back, run through just at a very high level, what exactly is lease accounting? What are some of the larger standards that companies have to follow, and why it might be a tricky function for accounting organizations?
Right. Yeah. So the lease accounting that we're here to talk about now is over the last few years, all of the standard setters have introduced new lease accounting guidance that have whole scale changed the way we used to account for and report leases. For everybody, the biggest significant change that you're going to see is all leases that you have, with very few exceptions, are going to be on the balance sheet. That's the most visible change that everyone's going to see. So whether you're a public company, a private company, or a governmental entity, all of these leases that we sort of used to enter into and we'd see costs on the income statement, we would bury all of the details in the footnotes. The difference now is that we're going to see our balance sheets reflect all the assets and liabilities associated with leases that we've never had to report before. So if you report under FASB guidance, you'll be adopting ASC 842, which public companies did as of January 1st, 2019. The international standard IFRS 16 also came into effect as of 1/1/2019, and governmental entities are subjected to GASB statement number 87, which has come into effect within this past fiscal year. So we'll talk a little bit more about some of those implementation dates and how the impact of COVID and some of the other economic environment has had on it. But in a nutshell, the biggest thing that people are going to see is that the guessing game in terms of how much you really had invested in assets and what kind of obligations you had related to leases is over for the most part. And I would say, if it's an improvement, which was the FASB's goal here, is to improve transparency on leases, is that prior to adopting these new accounting standards, all the ratings agencies, whether it's S&P, Moody's, or whatnot, would try to guess at the level of obligation or the level of debt that a company would have on its books that were hidden in, quote, hidden in some of these operating leases that were kept off balance sheet. So there was a lot of guessing, a lot of movement around there that wasn't consistent. Now, at least with the new accounting standards, in addition to putting assets and liabilities on the books, you have a robust set of disclosures, which include the rates at which you're discounting all of your lease payments. So now investors, all stakeholders really get a chance to see what that looks like.